everyone, and thank you all for joining us today. My name is Andrea Hardy, and I am the Director of Customer Success here at TOPS. And before I get started, I just want to say that I hope you're all doing okay and staying safe. I think that we're so used to what I call incremental change in our life. So dealing with this has been such a drastic change overnight. So none of us could ever imagine, how we come out the other end of this. So I was talking to my colleagues, and one of the things we discussed was, our industry is very recession proof, but, what would be the one exposure that we do have? And in thinking about this, collections really hit home. So this is why we're going to do this series for you all. And, my goal is that you take something out of this that can help you do this more effectively, just to have a little bit easier time getting through this. So let's go ahead and get started. But I wanted to say hello to everyone, but I'm a pacer when I talk, so I'm probably going to turn the camera off while we go through the presentation. So hopefully no one takes offense to that. But thanks everyone for joining us, and really looking forward to doing the presentation today. Quick review of what we're going to cover today. In part one, we're going to go through how to assess the impact that each community will need to be prepared for. And then in part two, we're going to create that plan and discuss how to execute and communicate this with residents. And then, of course, we'll open up the time for questions. And again, if we don't get to them, we will follow up with you after the presentation. So now we're going to throw up our first poll. So please take a minute and let us know whether you are currently with a management company or if you're representing an on-site or self-managed community. And while you all go through and get that information, I'm going to jump into part one. So essentially, we're going to look at what you can do to help your boards assess the variables that are really going to determine what measures they need to prepare for handling the impact of delinquent assessments. And I see that we've got a lot of management company people here, so welcome. And we do have about 25% are on-site self-managed, and I want to cover a little bit about how this is going to impact both of these scenarios and kind of what you all need to prepare for. So I want to touch on something important. As many of us are aware, paying our association dues typically takes a back seat to essential expenses when a resident is struggling with financial hardship. So rising delinquencies are inevitable, and all communities are going to feel the effects to some degree due to COVID-19. So I want to quickly throw up one more poll, and I promise I won't do any for a little while. But how many of you have seen an increase in delinquencies, in this early stage? So it looks like maybe about, half so far, but again, we're in the very early stages. So another consideration, and this is going to have an impact on it, is that there are also multiple federal, state, and local bills being presented that, if passed, are going to limit the association's ability to enforce non-payment up to and beyond COVID-19. So that's going to really impact, the ability for associations to collect the dues. And then lastly, this one really drove home with me. So take a moment and just really look at this and think about it. So as managers and company owners, it is going to be difficult to prepare your boards for this reality. When faced with any challenge in my management days and related to my personal life, I would always step back and take assessment of the situation, how to, prepare and deal with it and respond to it. So I think that it's important that, we look at how this is going to affect HOAs, how it's going to affect management companies, how it's going to affect our day-to-day life and what we're asked to do. So to do this, first we need to realize that not all associations are created equally. So let's talk about which factors are really going to drive how much of an impact an association can expect. I would recommend creating a checklist from this section to gauge how much of an effect your association should prepare for. And like I said, every one of them is going to be different. So let's go into the first thing that's probably going to impact the most, and it's the type of community. And as you already know, the type of community association will be a dominant factor. And unfortunately, a condo association or any of them that have utilities bundled into their association dues are going to probably get the most impact, because if you're doing monthly assessments, you're going to feel it quickly, versus someone who does annual assessments. And if you're including utilities in the assessments, it's understandable that the receivables are going to quickly grow when a portion of your owners can't pay. And it's like, how do we deal with that impact? Another factor would be, how many amenities a community has. The larger number of amenities, the more there is to, prepare for as far as expenses and not being able to cover things, and really looking at the reserve expenditures. And then this one was ironic that I happened to run across, but on the other end of the spectrum, the least impacted type of community may be a 55 and over, because if you think about it, these people are mostly living on Social Security, which has to date not been affected. So this is going to be, a game changer in really how you look at, which communities are going to have the highest amount of delinquencies. And then we'll go on to, consider also, it doesn't matter what type of community, but prior to COVID, what were the percentage of delinquencies that you already had? So if your association, had 5 to 10 or higher % of delinquency, it is going to be more challenging to recover from that as these get higher. And unfortunately, these communities are most likely going to have to prepare for cutting, non-essential expenses, and that may not be enough for some of them. It's really going to depend. So this is why it's so critical as managers and as board members for self-managed communities to really consider this, in how we move forward with delinquencies. And in conjunction with those two things that we just reviewed, the communities that struggle with cash flow prior to COVID are going to be in a financial hardship and have, in my mind, a very difficult decision ahead of them. So as managers, I'm sure most of you have been in a situation where you're managing a community where cash flow is challenging, where you have to decide, where to allocate what revenue is coming in. And juggling payables and managing cash flow is already difficult. And on these types of communities, it's just going to become more, up in your face of how am I going to deal with this? And lastly, location. So let's talk about how location is a large factor that's going to impact HOAs. It's probably front of mind to those of you who have lived in the areas where service providers and businesses are most prominent. Living here in Florida, I've been reading the extreme impact that Orlando is experiencing as they deal with the loss of jobs due to the park closures. So really, take to heart and identify those communities most likely to experience job loss and financial hardship. That should be the first communities that you really prepare for how to, manage this and how to help not only the residents, but how to help the boards get through it. And then secondly, stay up to date on what your state and local jurisdictions are planning regarding the businesses being able to resume normal operations, because that is going to have an effect. I know, right now it's up in the air and we're all unsure, but just stay up to date on those, keep your boards up to date on those, because that is going to have an impact. Okay, so once you take the time and really identify and determine the exposure for each of the communities you have, let's go into how you evaluate and plan for overcoming, the potential financial strain. The reality is that we should prepare our boards for how to deal with the worst case scenario. We hope it doesn't happen, we pray it doesn't happen, but in all reality, it could be something that, will come out of COVID-19. So that's where the proper planning and evaluation is going to make a big difference. As a management company, preparing your boards, as a self-managed community, leading your community and really understanding how it's going to have an impact. So first, we're going to talk about, evaluating your current financial position. So it's critical to look at, how to plan for the future. So does your association first have a monthly surplus, or is it in a deficit covering routine expenses every month? That's going to be a major factor. And then, has your community allocated funds for unforeseen expenses? That's going to be critical for those who have done that, to be able to cover expenses that are unforeseen when delinquencies rise, when the operating income gets lower. But unfortunately, as we know, most communities have not done this. Looking again at the current delinquency rate. And then lastly, is your association funding your reserves monthly? So the financial stability of an association is going to have a direct impact on the severity over the next few years. And then on the other side, let's look at how an association can conserve income. That's going to definitely make an impact on how much an association feels when this is going on. So look at if you've got a cash flow issue, deferring non-essential projects. Anything that you've got going on that is not an essential expense, utilities, insurance, your management fees, your different things they're routine, but anything that's a bigger project, just delay for now. I mean, that should be best practice. And then, for those that really do need to stream back, look at reducing, the maintenance of your common areas. If the pool is maintained twice a week, cut it back to once a week. If your landscaping company comes out, twice a month, could you get away with once a month? What are the measures that you can take that are going to just help ensure that financial stability? And then, this one seems pretty self-evident, cut back every cost. If you've got online delivery where possible, reduce your mailing costs, because you're gonna have to communicate with your owners a lot more. So not letting those mailing costs get out of hand. So utilize all the technology that you currently have. And then one that may be interesting and that we'll review in the next webinar is going to be, how do you get revenue quickly? Would be doing things like offering prepayment, like discount to supplement revenue. And that, yes, it's going to lower the amount of income, in the long term, but you can look at supplementing that if you let owners pay out at a small percentage over time. So then it's going to be a wash. And then lastly, a lot of associations may want to consider postponing their reserve contributions. And I know that can be a difficult reality, but during this time, it's just essential that we, look at conserving operating income and how it's going to supplement when things do get difficult. And then, You could also look into your banking resource. I know right now, covering operating expenses is critical, and banks are very open to lending right now, and interest rates are favorable. I know banks typically look at delinquency rates, but they're aware of the current situation, so they know that your delinquencies are going to be higher. So if it's something you're interested in, just reach out to your bank rep and consider that possibility. So you don't have that anxiety when it comes to how you're going to plan in the future. And then borrowing from reserves was also something that came up. But this is really going to depend on what jurisdiction you're in, what your state statutes allow. So you've got to check with your attorney or with your governing documents. Take a look at those to make sure that the language prescribing how the funds need to be paid back, or if the funds can even be borrowed for, are applicable. I know a lot of jurisdictions are not, they don't cover it. They're very silent on the subject. So there's really not a formal mechanism for addressing it. So that's just something to put at the back of your mind. You can mention to your boards, and it may be something that, if it becomes necessary, that you can look at doing. Now, I know for everyone on the management side, even for your self-managed communities, I feel compelled to cover this topic because as a previous management company owner, I can't fathom how I would have prepared to handle this change that all of you are experiencing. And in the next few slides, I just want you to really consider the impact that these topics will have on your business. Because we all know the industry margins for managing communities has really become so competitive. And for many companies, adding to your staff's workload is not feasible without additional compensation. And that's a tough spot to be in. So let's do a poll real quick about how many are currently charging administrative fees for their collection actions and their collection efforts, their payment plans. So it looks like we've got some who charge, about 30% who charge for some, but not all. 33% who don't charge for any. And so it really looks like an equal mix across the board. So I know that it may seem counterintuitive to consider asking your clients for an increase, but you really do have to weigh the reality of what you're going to have to do when managing delinquent accounts becomes too much for your team to take on. And if you're not currently charging administrative fees for collections, look into amending your management contract to include these additional fees. It's going to be so critical to being able to offer and provide the services that you have to provide during this time. Because we all know if we let collections get behind, if we don't do a good job in managing them, it's just going to compound the situation. And for self-managed communities or on-site ones, you're most likely going to need to look to increase your staff to handle the additional responsibility, or outsource it. I know we offer accounting services, so if that's something you're interested in, reach out to us and we're happy to provide you more information. But it is a critical piece that's going to affect any business or on-site managed community, because whether arrears will directly impact the ability to track payment plans to be timely and effective is going to become critical. And we're going to be facing a time where having additional payment options is going to be a necessary, situation. There's nothing we can do to get out of it. We've all had communities. I managed back in 2007, 2008, back when, things were very difficult. And we had communities that really struggled with it, even the nice communities, ones that were higher end, that had a higher price point. And, having abandoned homes and having homes where you couldn't find the owners, this is all going to be, a reality again. And it's just going to make our jobs more difficult to be able to collect and to be able to do everything effectively in providing those services. So next, let's cover practical ways that you can balance having compassion for residents that are experiencing financial hardship while still serving the community as a whole. And this is really going to be a difficult balance. And I'm going to put up a poll real quick, finding out what you guys are using to track your collections and payment plans. So I want to, oh, it looks like, yeah, we've got, a mix here. A lot of good TOPS clients. So thank you guys. We really enjoy working with you. But I want to touch base on what is happening today is going to be talked about for years to come, because there's no roadmap to help your boards find a balance between a commitment to help neighbors while mitigating the financial risk for the community as a whole. And so how do you find this balance? Truthfully, it's somewhere in the messy middle. So there's no clear answer. Every association will have a different way to address this topic. It's going to be based on a lot of variables. For some, compassion may be limited when their pool is empty, when their basic services are cut back. And it's a kind of situation that is really a slippery slope, because those who are paying will start to wonder why if they don't see the value in the services provided. So let's look at, even though associations are classified as a business, there's a major difference, because income comes from resident payments. It's a zero-sum game. Your boards may want to go above and beyond to help alleviate the stress, but at what cost? So it's understandable to be unsure of how to proceed. But I think the first step should be mapping out scenarios of what your financial position would look like if 20% or 40% of owners could not pay on time or at all. So before making any significant changes, let's look at the whole picture and the circumstances of the specific association. That has to be considered. So let's talk about how to prepare a strategy for each community depending on their financial health. So first, if you do not have a formal collection policy, it is imperative, I'm not going to say that again, that you have your HOA board adopt one, because this is going to be your playbook for managing payment options and defining what will occur if an owner does not make payment arrangements for non-payment. And I know that some boards may want to entertain deferring assessments or even reducing them. But this is not fair to owners, because deferring assessments is like credit. They're just going to get farther and farther behind, and it's going to be impossible to recover from. So any kind of agreement that allows for non-payment at all, it doesn't seem feasible. Every little bit that they can do helps. And just because owners can't access amenities does not waive their duty to pay. This was not a decision that was made by the boards, so that should not be something that you even entertain. And avoid waiving fees for owners who have a track record of not paying and who also had a balance prior to COVID. And lastly, please ensure your boards enforce the fee waivers consistently. Picking and choosing or not doing it consistently is going to lead to exposure for the community. That's where the collection policy is just golden in covering you and in knowing how to proceed every time one comes in. And we're going to cover how to track that here in a little while. So what associations should do is consider just not charging latent interest during these next months, during the time when we're all, not able to be productive, not able to work, picking and choosing, and you know how hard it is to waive assessments and then have to do it on a one by one basis. I would highly recommend just don't charge them. That's going to make your life easier, and that's going to make it more fair on the people that you're charging those fees on. During this time, let's just put a pause on collection and interest fees. Now, it doesn't say that collections should not continue. If you were in collections prior to this, you should not get, a free hall pass. So consider a collection action stay on anything that happens after COVID-19 began. So anything that happened prior to, there was no excuse not to pay. And those should continue up until, of course, we're not going to foreclose on anyone. That should not be something that anyone does during this period. Lastly, it's going to be essential that you extend payment plan options for residents who become delinquent. So if you're not feeling the impact yet, start working with your boards. What are those guidelines? What are the things that we will consider? Offer 3 or 4. Okay, I can't pay, I don't have a job. Okay, pay this amount, but the main thing is have it in writing. And in these next few webinars, we're going to go into really showing you guys how to do that and give you examples. So we'll go through that, but I would say start thinking about it now. And then we want to talk about resident communication. This is so important. Staying in touch and letting residents know what's going to happen if they don't pay, because we all have been there where there may be people having severe financial hardships, but then there are going to be those homeowners who are like, I'm just not going to pay now. Other people aren't paying, I'm not going to pay. And that is going to be, a detrimental effect on the association. So making sure everyone understands what those ramifications are, what's going to happen. You are not going to be forgiven or pardoned from owing these fees, but we are going to work with you. So let's look at the main thing is to over communicate. We've all been there. Owners say, I didn't get that late letter. I never got my statement. I didn't receive that. So it's so critical to over communicate, because it's hard to argue when you can show 2 or 3 different ways that you try to communicate with them. And this is going to be essential for payments. So, delivering communication through multiple channels is so important. So I want to throw up one more poll on, what type of communication channels that you're currently using. So how are you, interacting with your residents? Is it mainly through mail, through email? Are many of you using like text services? It looks like there's a lot that are using email and written mail, or I should say snail mail is what we call it. But yeah, that is such a critical thing. The more ways that you can interact and get the information out, especially when, currently it's not easy to get out and post notices or to notify owners other than these other means. So, notification or keeping them notified about changes to your collection policy is going to be key. So if, that's one thing that you need to touch base on, is really looking at those collection policies, because it's going to be essential to probably put a short-term, modified collection policy in place. So look at, talking with your boards, look at talking to your association attorney. What does that short-term, revised policy look like to allow for these additional payments? Because it's not going to have to go on inevitably, but look at enacting something for at least the next year to cover, all these circumstances that can happen. But keeping those residents notified that we're going to edit the collection policy, and it's probably going to be to add more payment options, payment plans, additional payment methods. And if you're not providing credit cards, that is so critical, because people that are struggling with their operating expenses, if they've got credit, that's going to make a world of difference. I know firsthand, going through some rough times in my life, that my credit saved my life. I couldn't have paid my mortgage. I couldn't have paid my bills, but I did keep them up because I did have that credit. So you have homeowners who are going to do the same. Make sure you're offering payment options through credit card. And if you need, to find out how to do that, contact us. We will help you. And then letting them know, how can I repay this? How do I create, a plan where I'm not getting so far behind that I can't dig myself out of this? And in the next couple of webinars, we're going to talk about how you do this, because managing this can become a nightmare if you don't have a process. When I was managing, I saw so much disconnect between people requesting payment plans and doing it through emails and no system. And we ended up adopting like an electronic form, because having all that information and having them agree to it online was so critical, and it made a world of difference in tracking them. And then really, really driving home what's going to happen if they don't make payment arrangements. I mean, if you over communicate and they never reach out, that is not acceptable. They need to make that effort, because no matter what's going on in our lives, we all have to keep up with our responsibilities. And if I can't make my payments, I'm going to tell you, hey, you know what? I can't do it. So let's talk. And then, you know what? That's when the board's compassion is really important. How do we help this person, during this time until they get back to work, until they, can catch up with their bills, because everybody's going to be behind that has been out even for a short amount of time. So really look at, making sure they know that you're there for them, that you're listening, that your boards care, but that it's critical that they make those arrangements, because we have to think of the community as a whole. You've got that fiduciary responsibility as a board to think about the whole, and that could be difficult to weigh and balance with what we have going on, listening to one of our neighbors. So I know there's not going to be an easy solution, but I hope that, in these next few webinars, we give you the tools to help you really manage and deal with this at a much higher level than being prepared and being able to, communicate and let your residents and your boards know that you've got them. But I want to now open it up for questions. And I just want to tell you all, thank you, so much for taking time out today to attend. And, I look forward to, being of assistance. Any questions that you have, if you need a one-on-one, let us know. Our customer success team is credentialed, and they've all been, managers in the industry, or I should say most of them. And some of them have been with TOPS so long, they should be a manager. We should just give them their credentials. And then, next webinar, we're going to look at really how to mitigate risk and make sure that you all have a long-term plan for handling collections over the next year and a half, so that it really doesn't become a pain point to where it's going to be hard to get out from under. So again, we're going to open it up to questions, and I am so happy that you all attended, and thank you all. So I'm going to take a look and see if I can open up the chat thing. I'm not great with this GoToWebinar stuff. Let me see if I can pull out the questions here. All right. Okay, now I've got them open. And let me expand this and see. And I appreciate all of my team's help for trying to help with the questions. We do have quite a bit, so if we don't get to you today, please know that we will follow up with you afterwards. But I'm going to take a look at a couple of these. Wow, they're coming in. Let me see. It's kind of jumping around with all the questions, but where can you put an owner account note, such as the payment arrangements, or notes such as what was available If you're a TOPS Pro client, we are going to have a webinar on how to track these. And if you're a TOPS 1 client, we're going to do the same. But in the interim, if you have a specific question about how to do that, send us an email at success@topsoft.com and let us know which of the softwares that you're currently using. I did, during my management days, I got heavily involved in collections. We had close to 18,000 doors and 54 communities, and it really became overwhelming. So I have kind of a playbook for how to deal with those in the most efficient way that really helped us get on top of our collections. And so that's something I'm happy to share. And for our TOPS 1 clients, we're going to be doing the same thing, walking through the webinar and really showing you guys how to utilize and different ways to track things within there, because there's a lot of flexibility and ways that you can do things. So we'll show you how to do that. And then what do we do when a homeowner already started or stated that they're not going to pay? Well, I would say I could say I'm not going to pay my taxes, but it does not get me out of the obligation. So I would just respond with the part of the declaration that is mandatory. And I understand you feel like there may be circumstances why you shouldn't pay, but unfortunately, all owners are mandatory ownership of this association. So there is no saying I'm just not going to do it, unfortunately. Let's see. Do you have a TOPS 1 template for standard payment plans? There are multiple ways to manage the payment plans within TOPS 1. So keep in mind there's two parts to this. That there is the incoming information. So how do you gather the information from the homeowner, offer them the options and have them submit it to where it's in a consistent format? Because the last thing you want is back and forth on email, because it will become way too much to manage. So that's one thing I'll work on, is providing you all some templates and some ideas for this. If you have a community website, it probably has the option to do e-forms. So this is a great way to utilize getting a payment plan request, because then you get all the information and you ensure that it's all correct and that they agree to the terms. Because one of the major things I ran into was that people sign up for a payment plan, they think they just don't have to pay anything moving forward. So it has to be clear, it has to be concise, and they have to sign or check a box saying, I agree to these terms, so that you can really have teeth on following up with it. We have TOPS pay, but credit cards are charged. Yeah, I get that, and that makes sense. But again, this isn't something that we're charging. All credit cards charge a standard fee for accepting. But I always say it's better than the alternative of paying a large late fee or interest or getting way behind. As an owner, they've got to weigh what that is. And maybe that's something that the association can look at, how do we handle this? If a person wants to pay a large amount, is it worth writing off a little bit of the late fees to cover what they're actually having to pay, just so you can get that income coming in? Those are questions I don't know, but these are all considerations that the boards can have. And if your board, let's see, let me scroll down. If your board agrees to waive late fees, do you waive late fees for accounts that are in collections as well? That is a great question. I would say if you're not charging late fees across the board, you probably shouldn't segregate the ones that are in collections. I personally think that they should still pay late fees, but my opinion does not matter in this. You want to make sure you're consistently enforcing the same way across all homeowners. And that's just going to be that, it's better to be safe than worry about the exposure that an HOA will have and somebody coming back and arguing. And then, can ACH be set up for a payment plan with an individual member? There are ways you can do that, but it would be based on what they agree to, and then you would have to edit your charge code for that particular homeowner or a group of homeowners. And this is where I'm thinking, if you offer different payment options. Hey, you can instead of paying monthly, you can pay half now, and then we'll double it towards the end of the year when you're back in your job. There's so many options, but all of them will have to be reviewed, and then you can find a way to use the software to be able to manage this. So if I said, hey, if you prepay, I'll give you a 10% discount, I know that if they paid for the whole year, that's going to be my accounts that I move forward on. But if I say that you can pay instead of quarterly, I'll let you pay at the end of the year, whatever those payment arrangements are. If they want to do an ACH with it, you're going to have to just go back through and look at the way that your charges are set up, because ACH is going to take whatever they've agreed to. So if it's a $50 a month charge, it's going to take $50. If you want to change that, then it will depend on what software you're currently using. So if you're a TOPS client, feel free to reach out to us, and we'll give you kind of a roadmap on how to do that. And then one says that they have about $70K per month in utilities. If we run a 20% non-payment, we won't be able to pay the utilities. So how do we, handle people living essentially for free? And that's got to be such a hard place to be in. It was one of the first things that I thought about. This may be something that, if you want to talk one-on-one about it, we can visit and help you guys figure out how you're going to do this. But I would say communicate with your residents. Let them know this. Hey, because it may be to the point where you have to do a special assessment, or again, cut other, non-essential things so that you can cover cash flow and cover utilities. And that's a hard position to be in. But we definitely feel for you, and I know it's a hard situation. So I would take a look and mainly just reach out to your residents and let them know what's going to happen, even if they can just cover a small percentage of their association dues, so that it covers those utilities, so that essential things, don't suffer. And then someone asked for repeating the email. We are success, SUCCESS, at TOPS, TOPS, soft, SOFT.com. And again, if you already work with one of our success managers, feel free to reach out to your contact. And we'll be sending out a recap of what's going on. So that's something we can forward to you guys if you need that contact in writing. One person says the board is currently going on a case-by-case situation. We are not comfortable in saying anything to the residents about not paying their fees. 100%. Don't say anything about not paying fees. I would say just look at your collection policy, because that way you can say, hey, if you can, and there's different approaches to this. If you know it's going to be a problem, you looked at the impact factors. We live in Orlando. We know it's going to be a problem. So we should get this out there fast. If I live, or manage a 55 plus community, I know it's probably not going to be. I'm not going to rock the boat. So it's going to depend on each situation. If you know, and if you're already feeling the effects, then getting something out to your homeowners, letting them know, hey, not paying is not an option, but we are here to work with you. Please contact us, because there's things you can do, like requesting, information, requesting to know if they are laid off, if they're getting unemployment. Things like this are perfectly acceptable to ask to make that judgment, because people can't just jump on the bandwagon and say, well, I'm just not going to pay because now they've got these other options. So letting owners know, it's not going to work, and it has to be reserved for those people who actually need it. And then how about just general notes for an owner's account? Oh, I saw that one was answered. Perfect. Thank you, team. Thank you, Lindsay. And if there's a software that can document a promise to pay with a lift date that will track when the payments come in. Again, that one's a little more complex, so feel free to reach out to us, and I'll respond after, but it's probably something that not everybody in this webinar is going to experience. Another attendee says they have a building with 8 owners, and they were involved in a fire, and 4 of them don't pay their HOA dues during reconstruction, and 4 of them continue to pay. that hits home with me. I actually managed a condo that had a complete building burned down once, and we had a similar situation. That's a difficult place to be. For the ones that aren't paying, I would say, again, communicating with them that they're going to still owe, paying or not paying, their debt's just going to increase. So if they don't want to incur additional expenses, legal fees and all of the latent interest, depending on what your collection policy says, then have them understand and reach out, because if not, they're just going to get upside down with more and more cost associated. All right, and then we have another question in New York. People default, then bankrupt, wiping all the arrears. Yeah, that's happened to everyone. I think it's commonplace, and of course, typically the first mortgage holder is going to take that property, but I always say at least it cuts the bleeding. I know it's not good because you are losing that HOA income, but making sure you have bad debt expense allocated in your budget every year is so critical for that. I've seen associations that have to allocate 20 to 60,000 a year because they know that there are delinquencies and people being foreclosed on, which may become another reality that we see soon. So keep in mind when you're doing your budget to make sure that that's something that you're covering. And then, are there tools in TOPS 1 to actually create payment plans for owners? Yes, there are. And that's something we will cover, but if you need the information before our webinar, just reach out to us again by email and we'll get you that information and get someone in contact to help you set that up. And if one of the team could go ahead and post what our email is. I know I've said that a couple of times, but I just want to make sure everybody can go in there and grab that. And again, thank you all for attending today. I know this is it's really a difficult situation that's just been put on you in such a short amount of time, but know that, you're not alone. This industry is strong and, we are here to help you. So if you need anything, reach out to our success team or our sales team. Again, we are, thankful that you all are our customers and we appreciate your business so much. And I will see you all. Our next webinar is going to be on how to mitigate risk and make sure you have that long-term plan for collections. Same time, 2 weeks from now. But we'll follow up on the additional questions and stay safe, everyone. And as always, let us know how we can help. Thank you, everyone, and have a great afternoon. Bye-bye.